work together to de-escalate and resolve the current trade disputes. And while it is tempting to be a bit depressed about this perspective, I am actually hopeful, because there is a clear appetite to improve and expand trade.
TRT World's editor-at-large, Craig Copetas, joins me now from Paris. Hi, Craig. So the IMF is again the bearer of bad news. This time it's saying that risks are building up in the global financial system and that deepening trade wars could tip the situation over the edge. So why would tariffs on imports impact the banking sector?
Well, President Woodrow Wilson said that any true global peace requires a community of power. And that includes, in the 21st century, a global trade community, both of the public and private sector, including the banks. Now, what the IMF is saying is that President Trump and other powers and global leaders, private and public sector, because of Brexit, inflation, the trade wars, are undermining this. And what it boils down to, put it in very simple terms that I think every viewer can understand. What happens to you if you can't pay your rent every month? You're thrown out on the street. And that's what the IMF is warning about today. Everyone has to come together, put together some kind of global peace, as Woodrow Wilson phrased it, and put your house in order.
Yes, and we know that investors are getting increasingly worried about emerging economies, countries like Turkey and Argentina. Now the IMF has warned that around $100 billion could flow out of those economies in the space of a year, which is similar to what we saw in the 2008 financial crisis. Could we see an emerging markets financial crisis in the near future?
Yes, very possible, says the IMF. I would agree with them, but where there's going to be an even bigger problem and what will trigger it is the United States. Because the IMF is also saying that a recession would slash wealth in the United States by $5 trillion. $5 trillion, that's a lot of money. What the IMF was also pointing out today is the net worth of most G7 economies has turned negative. And we'll get a lot of letters on this. Let me tell you, Turkey is not an emerging market economy. Turkey is a modern economy. What they're really worried about are what we used to call third world country economies, a politically incorrect term, to be sure, but that's how they're being described privately. There will be a trickle-down effect from any crash of the United States because that's where all the equity is.
And the IMF has also taken aim at the longest bull run on Wall Street's history. We know that Donald Trump has taken credit for that, and the market is seemingly buoyant about the prospects of the US economy. But the IMF says investors are in danger of becoming complacent about the chances of an economic shock. Is a sudden sell-off or even a crash on the horizon here?
Well, you know, it's tough to speculate down that road. I want to go again back to what Woodrow Wilson said. For a global peace, for global harmony, it requires a community of power that we now do not see. Power today is not really in guns, it's in money. That's where it is. It's the global economy. And with Brexit, Trump's trade war, the Chinese stealing American technology and everything else. Everyone involved here is responsible for this. What Christine Lagarde said today, stop it. You've all got to sit down and you've got to work this out or you're creating a bubble that is going to burst.
Yes, and this report was wide-ranging. It also took aim at complacency in regulation, saying that warning countries against scaling back on these protections. I guess they're sort of hinting at what's happening in the US with Donald Trump rolling back those so-called Frank Dodd regulations that were imposed on banks in the wake of the financial crisis. I mean, the IMF is spot on here, isn't it?
Oh, they are, and China's even doing the same thing. The banks are trying to skirt the prudent capitalization requirements that grew out of the 2008 financial crisis. But there's a curious thing about economic history, Oscar. It's never the same bubble that bursts again. So the IMF may be a little off here by looking to speculate on a replay of the 2008 crisis. This could be a bubble that we don't see. It could be triggered by the mortgage debt. It could be triggered by student debt in the United States. It could be triggered by the inability of more and more developing countries not to service their debt. No one really knows until it happens.
Okay, Craig Copetas, great to get your thoughts as always. Thank you.